So let's kick it off with part one, Derek. Why don't you tell us? Take 2 or 3 minutes here and tell us, how did we get here
Yeah,
for the new auto insurance law?
yeah, absolutely. I think the easiest thing to do is to look back at how our system worked before we implemented our no-fault system. If you go back, 60 years or so, Brian, if I cause a car accident with you and we each have $5,000 worth of repairs to our vehicle and we each have $5,000 of medical expenses, well, what happens? Well, because I caused the car accident, you or your insurance company sue me for the repairs to your vehicle as well as your medical expenses. And then, of course, you're going to tack on, let's say $2,000 for attorney fees and whatnot. So my own policy pays my $5,000 of repairs, my $5,000 worth of medical expenses, and then your $5,000 repairs, your $5,000 of medical expenses, plus there's $2,000 of legal fees that got invited into the system. So the total cost of that car accident wasn't just $20,000, it was $22,000, plus there was some waiting time as you sat around waiting for that lawsuit to actually settle and be paid so you can have your car repaired and your medical expenses paid.
And I probably had to prove that it was your fault to be able to file that lawsuit against you to get my expenses paid by your policy, right?
Right. It can be a lengthy process and it can be expensive. So it's a little bit more of a convoluted system in that manner because there are a lot of other things that are at play. So in an effort to simplify that and to remove that, number one, legal expense that's involved, and number two, that waiting period for that lawsuit to actually get settled and paid, the state of Michigan said, well, in that exact same scenario, when Derek rear-ends Brian and they each have damage to their vehicle and they each have medical expenses, it doesn't matter who caused that car accident. Each of them goes their own way and go back to their own insurance policy for a claim for those expenses. So my insurance policy pays my $5,000 of expenses for my car repairs, just like it did before, as well as my $5,000 of medical expenses. But it does not pay your $5,000 of repairs or your $5,000 of medical expenses or those attorney fees that you tacked onto that lawsuit because you were suing me. Mine just pays for my own expenses from that accident, and you go back to your own policy for your expenses associated with that car accident. You don't have to sue me to get those paid. You don't have to hire an attorney. You don't have to wait for me or my insurance company to pay you or yours. We just both go our own ways and we make a claim under our own insurance policy. And that's the idea of our no-fault insurance system.
So we're both relying on our own coverage that's in play in the event of that accident, correct?
Exactly. If you wanted your car repaired after an accident, well, you better have chosen collision coverage on your vehicle because you're not going to be able to sue me for those $5,000 of repair costs because you're going back to your own insurance policy rather than coming after me. So you'll notice that although we have a no-fault system which says everybody goes back to their own insurance policy in the event of an accident, there are sometimes lawsuits here in the state of Michigan. We'll get into those in just a few moments, but it's important to keep in mind that there is fault when there is a car accident here in Michigan, even though we have what's called a no-fault insurance system. No-fault insurance doesn't mean that nobody is deemed at fault in the accident. If you look at a court case or a crash report, you'll see that in 99.9% of instances, someone was primarily at fault in that accident. But our no-fault insurance system just says it doesn't matter who was at fault. Both parties go their own ways and go back to their own insurance policy in the event of that accident. So keep that in mind here, that although we do have a no-fault system and it greatly reduces the amount of lawsuits here in Michigan, there are certain instances in which a lawsuit is involved or a lawsuit is filed after a car accident.
Got it. Okay. So our no-fault system, most people are aware that for collision coverage in Michigan, I can't sue the other driver for the damage that they caused to my vehicle in a collision. It sounds like the same thing applies to medical expenses. I'm going back to my own policy for my own medical expenses, no matter who was at fault in the accident, just like I would do for the repairs to my car under my collision coverage. Is that right?
Exactly. Yep,
Okay,
correct.
got it. Well, let's contrast that with how the medical coverage will work under the new auto insurance law. And this is going to be the real meat of our workshop this morning. This is part 2, the medical coverage provided by your auto insurance policy. Now, it's very important to understand, this is referring to the coverage that pays for your injuries. You and your family have medical expenses and maybe some rehab or some sort of lingering care expenses because you were injured in a car accident. I like to equate this coverage for simplicity to sliding off the road on black ice and hitting a tree. No one else was involved. It was just you and your vehicle and a tree, and you were injured. You have expenses associated with those injuries. Now, if we're looking at a sample policy here, we want to lay out just a few key terms before we dive in too deep. Up at the top there, highlighted, is the insured. And the insured on this sample policy is Jane Doe. Typically, the insured is going to be spouse and spouse. Next to that, you'll see resident relative, which is defined as someone living with and related to the named insured. Notice that it is and. They are living with and related to the named insured. So a friend of your child that lives with you is not a resident relative, but your child that lives with you is. Your child that moves out and has their own apartment or buys their own home is not a resident relative. A resident relative in the traditional sense would be your kids that live with you at home, but it would also apply to a parent that moves back home and lives with you. That's a very important term and a very important definition, especially under the new auto insurance law.
Hey, Brian.
Yeah.
I'm going to put you on hold for just a quick second. We've got a question from Al. Al, go ahead. Al, if you'd like, you can also send us a question through the comment or the chat function in this workshop. So if that's easier, feel free to send us your question in that manner.
Perfect.
Go ahead, Brian. We'll wait for that.
I'll keep going and we'll watch for that. So why don't you read that question, Dee, while I just lay out the 2 highlighted coverages in our sample policy there. You'll notice the top one is residual bodily injury. And over to the right, under the limits section, you see $500,000 per person, limited to $500,000 total for any single occurrence. This is Jane Doe's lawsuit coverage, and this is going to set the amount that her insurance company would pay on her behalf if she's being sued because of a car accident. The other highlighted coverage, which is going to be the focus of part 2, is personal injury protection. There's a big red arrow there because that is what we're talking about now. Personal injury protection, which we will often refer to as PIP, is the medical coverage and rehab and long-term care and all this other very, very valuable stuff that is baked into that personal injury protection. Notice under the limits section, it doesn't provide a dollar value. That's because for all of us, since 1973, all of us in Michigan have had unlimited lifetime personal injury protection coverage provided by our auto insurance system. I may have had the best policy in the world. I may have had the worst policy in the world. But between those 2 policies, both are going to provide unlimited lifetime personal injury protection coverage. And that is potentially changing under the new law, which we're going to touch on in just a moment here. Derek, do you want to jump in?
Yeah, so the question was, is a sibling considered a resident relative? And the answer to that is yes, they are. Parents and grandparents and siblings and children-in-law via marriage are all considered resident relatives for the purposes of auto insurance here in Michigan.
Yep. That's a great question.
And Brian, I'd like to point out one other thing on this sample policy here. You'll see $500,000 on our example for bodily injury coverage, the top highlighted item. You'll also see 500,000 and 250,000 offered going forward for the personal injury protection coverage, which is the lower highlighted line item. Brian mentioned that you don't see any coverage amount here because it's just unlimited for everybody. Don't get confused by the fact that personal injury protection coverage is going to be offered at 250,000 and 500,000 going forward. That looks very similar from a dollar amount to the bodily injury coverage, but they are two entirely separate coverages. It's simply a coincidence that they're both offered at the same dollar amounts of coverage. So keep it separate in your mind that those are two entirely separate coverages.
That's a great point, Derek. And why don't you just expand, takes 30 seconds or so, and give us a little bit more of a highlight, because we've never had to talk much about the personal injury protection coverage in the past because there wasn't much of a choice to be made. We all had an unlimited amount by law. Tell us just briefly, what did that provide and what were the benefits of it?
Yeah, we all had an unlimited amount of the coverage, and it covered just about everything under the sun with regard to an injury from a car accident. So there wasn't a whole lot to talk about. It was hard to screw it up, if you will. What it covered was your initial medical expenses from a car accident, your ambulance ride, your doctor visit, your surgery, those sorts of things. But it also went much beyond that. It would pay for speech or physical rehabilitation. It would pay for mental counseling if you were, had some sort of trauma from that accident. It would pay to modify your home or your vehicle to make them handicap accessible. It would also pay for long-term care. If you needed someone to stay at your home to help you go about your daily life, because you had some injury from that car accident, maybe you had a brain injury or you were paralyzed, it was going to pay that potentially 24 hours a day for you to have care in your home. Or maybe you needed to be in a specialized nursing facility for a year or a decade or the rest of your life. It was going to pay for that as well. So it doesn't just pay for your initial medical expenses. It pays for all of those expenses that are ongoing potentially for the rest of your life because of that injury from that car accident.
Wow.
You'll see a few things listed at the bottom of this slide, but those aren't changing, so I won't dive into those here. So the key point, Brian, is that for nearly 50 years, you and everybody in Michigan has had an unlimited amount of personal injury protection coverage.
Now, none of us, Derek, have had the conversation with our insurance agent in the past about how much of that coverage we want or how much is appropriate for our family. But I know that the new auto insurance law was designed to offer more choices for what that personal injury protection coverage would pay. Now, I, of course, have some clients that were very concerned about potentially not being able to keep that unlimited coverage that they've had in the past by default. Can you give us a brief overview of what is going to be available under the new law and what does that look like?
Yeah, absolutely. So to the relief of many people, the unlimited option is still going to be available, and it's going to be available to everybody. Now, there are two other choices that are available to everyone as well, 500,000 and 250,000. So everybody out there, regardless of whether they have health insurance or if they're on Medicare or if they have nothing at all, everybody is eligible to choose options 1, 2, or 3, unlimited, 500,000, or 250,000. Now, keep in mind that these are on a per person, per accident basis. So if my wife and I choose $500,000 of coverage and we get hurt in a car accident, we're each going to have $500,000 of personal injury protection coverage for our own injuries from that car accident.
So what if I rack up more expenses than what I've chosen for my coverage amount? Then those just become my responsibility?
Yeah, you're liquidating assets to pay that, and then you're running up a credit card and or whatever type of loan you can get, and hoping that that's enough to cover it. I think if that's not, you're probably financially devastated enough that you qualify for Medicaid and hand the bill over to the government.
Gotcha. Okay. So if I'm choosing a coverage amount instead of unlimited, then that's setting the max of what my insurance company would pay toward those expenses that I'm incurring.
Correct. And you're
Got it.
personally liable for any amount in excess of that.
Got it. Okay, great.
And
Continue.
options 4, 5, and 6 have not been super popular, but they are available. And we'll see later in this presentation that it's important to understand what options are available to other drivers on the road, because there is a trickle-down effect that we're seeing out there on the road. Now, options 4, 5, and 6 are enormous coverage reductions versus what people have had in the past. But again, it's important to know that there will be people that choose them. Option 4 looks just like option 3, $250,000 of coverage. However, there's an asterisk that says with opt-out option. Somebody that has QHC, which is qualified health coverage, is eligible to opt themselves out of coverage. Now, the policy itself would say this policy provides $250,000 of coverage, and anybody in the household that has QHC that wants to opt themselves out of coverage, meaning they want no coverage at all, they would list their name as someone that opted out of the coverage. Anybody that's covered by the policy that did not opt themselves out would be left with $250,000 of coverage. Now, it's kind of strange to us, but the opt-out option is not available for options 1 or 2. If somebody is adamant about opting out of coverage because they have qualified health coverage, and we'll get into that a little bit in more detail on the next slide here, but if somebody's adamant about opting themselves out, everybody else that remains covered has to have $250,000 of coverage. You can't opt out with the $500,000 or the unlimited options. Now, option 6 gets you to a pretty similar point as option 4 with opting out of coverage, but instead of saying $250,000 of coverage on the policy, but there are some people that are opting out of coverage to have none at all, option 6 simply says there is no coverage at all for anybody covered by this policy. Those people that choose that went from having an unlimited amount of coverage to having none at all. Option 6 is available only to people that are on Medicare Parts A and B, and you'll see a little bit later in this presentation what the differences are between how Medicare is going to treat someone hurt in a car accident and how personal injury protection coverage would treat them.
Got it. And just because I'm eligible doesn't necessarily mean that's the right choice for me and my family, correct?
Correct. It's simply who is eligible under the law to make this choice.
Got it. Okay. And I'm going to jump in to answer a question from Kathy on the chat. It was a great question. She said, could the excess over $500,000 be covered by your health insurance if you have coverage? So let's assume that a driver chooses to have $500,000 of personal injury protection coverage and then racks up $800,000 of expenses. What someone would want to do is make sure that they're electing that this personal injury protection coverage be designated as excess over top of that health insurance plan. So if there is a health insurance plan that would pick up some of those expenses, you want to make sure you designate the personal injury protection coverage as excess, because as we're going to see in just a moment, the personal injury protection coverage will pay a ton of expenses that your typical health insurance plan, and especially Medicare, will not pay. So you want your health insurance to pick up what it will pick up first, and then you want to save or reserve your $500,000 of personal injury protection coverage to be excess and pick up those expenses that the health insurance does not pay. Now, if you're choosing unlimited, then it doesn't make that much of a difference. But if you're choosing $500,000 or especially $250,000, if there's a health insurance plan in place that will cover some of those expenses from a car accident, which number one is very, very important to confirm because those plans have changed. Number two, you want to designate the personal injury protection coverage as excess in your auto insurance policy.
Brian, if I understand correctly, the personal injury protection coverage is almost like a coverage that you want to keep in your back pocket. So you send everything to your health insurance first to see what it will pay, and whatever it won't pay, which we'll see shortly what it doesn't pay for, you whip out that personal injury protection card to pay for those things that wouldn't have been paid otherwise. If you don't keep that in your back pocket, you might end up using that personal injury protection coverage on things that would have been paid by your health insurance. And now you need these types of ongoing care services that aren't covered by health insurance, but you already used up your personal injury protection coverage, so you don't have that available for those ongoing needs.
That's a great way to put it. That's exactly right. Yep. So Kathy, hopefully that is helpful and answers your question. Please confirm if we can go into more detail. We're going to touch just briefly on qualified health coverage, which is what was brought up in that chat question. Qualified health coverage is defined under the new auto insurance law. It simply states that it is health insurance that does not limit or exclude coverage for injuries from a car accident. It also says that that health insurance plan must have an annual individual deductible of $6,000 or less. Now, what you really need to know is that if your health insurance plan is qualified health coverage, as defined under the new law, that health insurance provider will mail you a letter stating your plan qualifies as qualified health coverage. You may not need to do anything with that, but if you are considering one of these lesser coverage options, or especially if you're thinking about opting yourself out, this is something that is required to be provided to your auto insurance company for them even to be able to offer that to you. Notice also Medicare Parts A and B are considered qualified health coverage, but that's handled in a different manner.
And Brian, I would say that those letters about qualified health coverage, when a health insurance plan is providing that information to their covered individuals, it is doing a pretty good job of noting that there are many, many things that would be covered by personal injury protection coverage that won't be covered by that health insurance plan. So that letter does a good job of notifying someone if their health insurance is considered qualified health coverage, but it also does a good job of reminding them that, hey, just because this is qualified health coverage, it doesn't mean that it's going to replace the personal injury protection coverage on your auto insurance policy, because those are two entirely different beasts, like we'll see in a moment.
Right. Yep. That's a great point. And then, of course, you've got the coverage selection forms that we'll see later, where the state has laid out the considerations of, hey, if you're making this choice, keep this, that, and the other thing in mind, because these would become your responsibility. Key point here is that options 4, 5, and 6 are very complicated. They're dependent upon who lives in the home with you. They require documentation and the completion of signature forms. But more importantly, they're a significant coverage reduction compared to what you have had by default in your auto insurance for almost 50 years now. Nonetheless, even if you don't plan on choosing one of them for your family, it's important to know that they're out there because of what we're going to touch on in part 3 of this workshop. Now, Derek, I've had a few clients say, hey, I think I want to keep that unlimited coverage. I'm not super keen on giving that up, but I also don't want to see my auto insurance premium double next year. Are we seeing that? What do you expect from a premium standpoint?
Yeah, it's kind of interesting. What the state of Michigan did was they required that all insurance companies in the state of Michigan reduce the cost of the unlimited personal injury protection coverage by 10%. So it doesn't apply to the entire policy's premium. You're not going to see that on your collision coverage or your rental reimbursement or anything like that. But with regard to the cost of the personal injury protection coverage, even if someone keeps the unlimited amount of coverage that they've had for nearly 50 years, that insurance company must prove that across their entire book of business here in the state of Michigan, they reduced that cost by an average of 10%. So if I keep unlimited, Brian, and you keep unlimited, I might see an 8% reduction in the cost of my personal injury protection coverage. You might see a 12% reduction in yours. But overall, each insurance company must prove to the state of Michigan that they reduced the cost of that coverage by an average of 10%. Now, it's kind of interesting, how they would be able to do that. And there are really two reasons. Number one, the state of Michigan finally allowed auto insurance companies to negotiate a fee schedule with the healthcare providers. In the past, they've never been able to do that. So when one of their clients receives medical treatment after a car accident, the auto insurance company simply pays whatever the healthcare provider bills them. Now there is a fee schedule, and so we're all going to benefit a little bit by that. The second reason is that some people that used to be covered by personal injury protection coverage are no longer going to be covered. They've been carved out of our system. So that's reducing the cost for everybody because we've all been subsidizing them a little bit in the past, and I think we'll touch on that here shortly, Brian.
Yep, that's a great point. Now, we've talked a little bit about health insurance being in the game potentially. We mentioned Medicare earlier. You had focused earlier in the presentation, Derek, on how personal injury protection coverage goes much beyond what a health insurance plan or Medicare will pay in the event that there's significant injuries from a car accident. Why don't you give us a little breakdown about how it may differ in terms of, number one, how I'm treated, and number two, what's covered depending on what I chose for that auto insurance coverage. Did I keep my personal injury protection coverage, or am I relying on health insurance or Medicare? Why don't you give us some of the highlights?
Yeah, sure. So you'll see on this slide here, we've got personal injury protection coverage on the far left, health insurance in the middle, and Medicare on the far right. Now, the top two rows here, deductible and copays. With personal injury protection coverage, there is one deductible and it applies a single time. It's small, usually $300, but a maximum of $500. Also, there are no copays. Once you've paid that one deductible, you do not have another deductible or any copays for all of your medical expenses and ongoing care needs that you have because of injuries from that car accident. Most people know with health insurance and Medicare, that deductible resets every single plan year. So someone that gets hurt in a car accident in December has to meet their deductible before their health insurance starts to pay for their injuries from that car accident. Then as soon as the calendar hits January 1st, they've got to meet that deductible again. So that could be very challenging from a financial standpoint just because of the timing of that car accident. Most people know that those copays reset every year as well, and they typically continue without a maximum for the life of that person receiving services. So personal injury protection coverage, much better from a deductible and a copay standpoint. Now in the middle here, you'll see coverage needs to be enforced at the time of the accident for personal injury protection coverage. If I get in a car accident today and I am so traumatized that I say I'm never going to ride in a car again, I'm never going to own a vehicle again, I can cancel my insurance policy tomorrow. And because I had coverage in force today, when I had that accident, my medical expenses and my ongoing care is going to be covered for the rest of my life, even though I canceled my policy the day after the accident. With health insurance and Medicare, most people know that coverage needs to be enforced at the time the person is actually receiving those services in order for it to be covered. So if I'm relying on health insurance provided by my employer for my injuries from a car accident, and I'm so banged up that I can't return to work and therefore I lose my health insurance, I'm going to be in big trouble when I'm trying to find replacement health insurance that's going to cover my pre-existing injuries. Now, the bottom two rows here, to me, Brian, are the biggest differences.
Sure.
It's attendant care and a nursing home. Like I mentioned before, attendant care is to have someone in home with you to help you bathe, eat, get dressed, etc. Do what you can to live as close to a normal life as possible. That is covered by personal injury protection coverage. In the past, it's been covered on an unlimited basis. You can imagine that that is extremely expensive to have that type of care. Going forward, someone that chooses an unlimited amount of coverage is still going to have an unlimited amount of coverage for attendant care. But someone that reduces their amount of personal injury protection coverage is going to have a lesser amount of that or none if they eliminate their personal injury protection coverage, because you'll see here, health insurance and Medicare does not pay for attendant care. It also does not pay for a nursing home. Someone that's injured in a car accident and has a brain injury, or they have some sort of paralysis and they need to be in a nursing home for the rest of their life, that's going to be covered by personal injury protection coverage. It's not going to be covered by health insurance or Medicare. So while it's true that health insurance, Medicare, and personal injury protection coverage both do a pretty similar job of helping cover expenses from that initial injury at the beginning. When it comes to any sort of ongoing care that someone might need, there's no comparison. Personal injury protection coverage is by far the best bet when it comes to those ongoing needs that somebody might have.
Interesting. So there's what, maybe 30 or 35% of overlap in terms of what would be paid by all three, but then that personal injury protection coverage is drastically expanded in terms of what actually would be covered. Is that about right?
Absolutely. And, to a lot of people, maybe not a lot, but you might tend to think that, well, then you're getting double dipped by the insurance companies, because if your health insurance and your auto insurance both cover those initial expenses, well, why do you have double coverage there? Well, the personal injury protection coverage on your auto insurance is going to be discounted if you have health insurance that's going to cover those initial expenses. So yes, although they both say that they cover those initial expenses, the personal injury protection coverage is discounted because it knows that there's a health insurance plan that's going to pick up those initial expenses, and personal injury protection is going to cover the things that aren't covered by the health insurance.
That's great, which brings us back to Kathy's question from earlier.
Yep.
Key point, personal injury protection coverage provides much broader coverage than what you would find in health insurance and certainly in Medicare. Now, Derek mentioned earlier that there are two reasons the state of Michigan is requiring insurance companies to reduce the cost of personal injury protection coverage, and there's a chance that they can actually do it. Number one, like Derek said, that fee schedule was finally negotiated with the service providers. But number two is that certain individuals are no longer going to be covered by personal injury protection coverage. At this chart that we've got in front of us here, the left side shows who was covered under the prior auto insurance law, and the right side shows who is covered under the new auto insurance law. Notice that the top three are all the same: you, your spouse, and your resident relatives. Let's take a moment and remember that a resident relative is someone who is related to me and living at my home. My home is their primary residence. Notice under the old law, any driver of my vehicle and any passenger of my vehicle was also extended my unlimited personal injury protection coverage. That may be Aunt Martha, who comes into town from Georgia. It might be my friend who flew in from Denver. It might be my child that came home from New York City over the holidays. Any of those who are using my vehicle or riding in my vehicle with me are going to be provided unlimited personal injury protection coverage under the old law. Notice, under the new law, those individuals are not covered. So the new law applies a name tag to you, your spouse, and your resident relatives. And that name tag says, "Hi, my name is Brian, and I have unlimited personal injury protection coverage." That follows me when I'm on the road as a pedestrian, or I'm riding in a taxi, or I'm borrowing a friend's car, or I'm in my own car. It follows me, just like the old law did. But notice, under the old law, there was also this bubble that was created around my vehicle that said anybody that comes in my vehicle with me, or even without me, is also provided my unlimited coverage. Under the new law, I've still got my name tag, but there's no longer a bubble created around my vehicle, extending my coverage to anyone outside of my family that lives with me in the same home. This is most critical for families that have a child that has moved out, has their own apartment, bought their own home, moved in with their girlfriend, and is still driving a vehicle insured by mom and dad. Because under the old law, they were still extended mom and dad's personal injury protection coverage because that child was a driver of your vehicle. And even when their friends or their girlfriend hopped in the car with them, they had your coverage too. Under the new law, your child who does not live with you, even if they're driving your vehicle, is no longer covered by your personal injury protection coverage.
So, Brian, under the old law, if someone hopped in my car and they let their auto insurance lapse, or they didn't own a vehicle, so they didn't have auto insurance, they were going to have an unlimited amount of personal injury protection coverage on my own policy.
Correct.
Right?
Yep.
And now under the new law, in that exact same scenario, that person has no coverage at all because they're not going to get my coverage. They have to rely on whatever they have. And if they don't own a vehicle or they let their auto insurance lapse, they're not going to have any coverage. And therefore, I have a little bit of an exposure because if I cause a car accident and that person's hurt, they're now going to be suing me for their medical expenses under our new law because they're not going to have coverage for them, correct?
That's right. Those people went from an unlimited amount of coverage under your policy to being carved out and relying on whatever coverage they have, which in many situations may be none. Meaning that we're going to talk in just a moment here in part 3 that there is a much greater lawsuit potential in Michigan because of the new auto insurance law, carving certain individuals out of personal injury protection coverage.
How do I add coverage for those people?
You don't. You need to account for their potential necessary lawsuit against you if they've incurred medical expenses involving a car accident with you and your vehicle. The alternative, the new law does allow a child that has moved out that is driving a vehicle owned by mom and dad. That child now has the opportunity to insure that vehicle in their own name. The old auto insurance law did not allow that. Of course, it may be more expensive for your 19-year-old child to insure a vehicle in their own name, but under the new law, that becomes very, very important because that child that moved out no longer has your personal injury protection coverage as a driver of your vehicle. They must live with you in order to be covered by your policy. Key point here is that some people who used to be covered by your PIP coverage will no longer be covered under the new law, which we gave a slight teaser on, but brings us into part 3, lawsuit coverage. And we'll work our way quickly through this section here, but it's important to remember our part 2 conversation was about your own injuries, your expenses associated with your injuries. Part 3 is related to someone else's injuries. In part 2, we talked about sliding off the road and hitting a tree. In part 3, I equate this to backing out of your driveway, not seeing a bicyclist coming down the road and hitting the bicyclist. You weren't hurt, your car was barely hurt, but someone else was injured and they have expenses associated with that accident. I'm going to jump into a chat question real quick here from Kathy. How do college students count? If they are living on campus but driving mom's car, which would be their primary address? That's a great question. College students are generally going to still qualify as living with mom and dad, so long as they keep mom and dad's address as their driver's license address, their voter address, their tax return address, and they keep some of their stuff still at mom or dad's home. So when they're away at school, on campus, or even renting an apartment off campus, so long as they intend to return to mom or dad's home on break, over the summer, for holidays, and they keep using that address as their primary mailing address, they're likely going to still be considered as living at home and still covered by that personal injury protection coverage from mom and dad's policy. Agreed, Derek?
Yep.
Okay. So let's take one quick look again at that sample policy, because part 3, remember, we're talking about the lawsuit protection coverage, which again was the residual bodily injury. And in our example here, Jane Doe, she has $500,000 of lawsuit coverage on her auto insurance policy. And again, that's setting the amount that her insurance company will pay on her behalf if she's being sued because of a car accident. Like Derek mentioned earlier, we see similar coverage amounts between personal injury protection and bodily injury liability, but they are entirely separate. Just because I choose to keep unlimited PIP for me and my family, it doesn't mean that I can skimp on my bodily injury liability, because someone else on the road may not have kept unlimited for them, or they may have massive earnings that they no longer are able to bring home because I've hurt them in a car accident. So let's dive in a little bit further there, Derek. How did my lawsuit exposure change when the clock struck July 2nd, 2020, and the new auto insurance law became effective?
Sure. Well, let's just take one accident under the old law and the same accident under our new law. Um, let's pretend that I got severely hurt in a car accident that you caused. I usually use you as the person that gets severely hurt in that car accident, so I'll take the brunt of it this time.
Yeah, you've gotten me pretty banged up so far
So
here. Thanks.
let's say I have a brain injury and it inhibits me enough that I can't work for the rest of my life. Well, under our old law, I'm going to have, of course, lost income. I'm a lowly insurance agent, but I do earn a measly little income. So I'm going to have lost income for the rest of my life because I can't work. I'm going to have a ton of medical expenses for my brain injury. And I'm going to have a severe decrease in the quality of my life because I've seriously been impacted by this brain injury. Well, I'm going to sue you for my lost income, and I'm going to sue you for the decrease in the quality of my life. I'm not going to sue you for my medical expenses associated with my brain injury and all of that long-term care that I'm going to need for the rest of my life because it's covered on an unlimited basis by my personal injury protection coverage.
By law, it was provided by your policy automatically, correct?
Correct.
Yeah.
So my lawsuit against you, yeah, it was going to be large because it was going to be my lost income and the decrease in the quality of my life, but it wasn't going to include those medical expenses and that long-term care. Yeah. Under the new law, let's assume that I completely eliminated my personal injury protection coverage. Well, I'm still going to sue you for my lost income and the decrease in the quality of my life. Those are the same. But I'm also going to sue you for my uncovered medical expenses. Maybe I decided to rely on my health insurance for my injuries from a car accident. Well, that's great, but it's not going to cover all of that long-term care I'm going to need for the rest of my life. So that lawsuit against you is going to be exponentially greater under our new law than it would have been under our old law. So even though you kept an unlimited amount of personal injury protection coverage on your own policy, Brian, because I didn't, well, you're seriously impacted by my choice because now my lawsuit against you is going to be much greater than it would have been under our old law.
So if I cause a car accident and I see that airbag go off in that other vehicle, I'm crossing my fingers for two things. Number one, that it's just an insurance agent. It's not a doctor. It's not an attorney. And number two, that person in that other vehicle kept unlimited personal injury protection in their own auto insurance policy. Because if either of those are not true, I'm looking at a very sizable lawsuit against me. Is that right?
Absolutely correct. Yep.
Okay. Got it. Well, let's take just a quick look at this chart showing what the required coverage amount was under the old law and what the state now recommends under the new. We're not going to focus much here because the majority of our clients have far more liability coverage than what is noted here by the state, but I think it's important to at least point out that the state of Michigan used to require at least $20,000 of lawsuit coverage to be legal to drive. That's totally inadequate for just about everybody, but nonetheless, you could be legal with $20,000 of lawsuit protection. Under the new law, they have a recommended amount of $250,000. That's more than 10 times what used to be required to be legal to drive under the old law. So there's obviously knowledge on the state side that there is a much greater lawsuit exposure in the state of Michigan than we've had in the past. And a key point here is that if you hurt someone who chose less than unlimited PIP coverage in their auto insurance, like Derek said, they can now sue you for those uncovered expenses that they incur. Derek, let's bring it home here with part 4, making your choices. Assume that I didn't have my coffee this morning, or I caught a quick cat nap because I was up too late watching Monday Night Football. Give us the key points here. Tell us, how do I make my coverage choices? How do they get reflected? And do I need to take any action?
Yeah, sure. So the way most insurance companies are making the transition to our new auto insurance laws is they are renewing their existing clients' policies into the new laws the first time their policy renews as of July 2nd or later. So the first time everybody's policy renews July 2nd or later, it's automatically going to renew into our new auto insurance laws. Now,
It's July
each insurance
2nd, 2020, correct?
I'm sorry?
That's July 2nd, 2020, correct?
Correct.
Okay, so
Correct.
some of us on this call, our auto insurance may have already renewed into the new law anytime from July 2nd until now.
Yes,
Yeah.
correct. And what insurance companies are doing is they are sending out two forms, usually 50 to 90 days or so before that first renewal as of July 2nd or later. Those two forms are connected to the two main topics we've talked about today: bodily injury and personal injury protection coverage. Now, the bodily injury form is required to be returned by anybody that has less than the state's recommended minimum amount of coverage of $250,000 per person, $500,000 per accident, and wants to keep less coverage than that. Someone that has more coverage than that, or someone that has less but wants their coverage to automatically be increased to the state's recommended minimum, can entirely disregard that form.
Hmm.
Now, the personal injury protection coverage form, the default option is the unlimited amount of coverage that we've all had in the past. So anybody that wants to keep an unlimited amount of coverage can entirely disregard that form, and their coverage amount will remain unlimited. Somebody that wants to reduce their coverage must complete that form and return it to the insurance company and sign and certify with their initials on numerous parts of that form that they understand the coverage reduction that they are selecting, and they are aware of the implications of making that choice. So the important part here is that anybody that has more than $250,000 per person, $500,000 per accident of bodily injury liability coverage, or has less than that but wants it automatically to be increased to the state's recommended minimum, can entirely disregard the bodily injury liability form. Anybody that wants to keep the unlimited personal injury protection coverage they've had in the past can entirely disregard that form. So the good news is that most people can entirely disregard those forms, bury their head in the sand, and simply make sure that the renewal invoice for their auto insurance gets paid. Anybody that wants to reduce their personal injury protection coverage or have less than the state's recommended minimum amount of bodily injury liability coverage needs to complete and return those forms.
Got it. So what would you say, 90% or so of your clients can totally ignore those coverage selection forms? They don't need to complete them. They don't need to return them. Is that about what you would say?
Yeah, and the state's requiring that insurance companies place certain verbiage on these forms. A lot of them say you must complete this form, you must make a selection, it must be signed and returned to your insurance company. The default personal injury protection coverage is unlimited, even if you don't return it. So no action is needed there if you want to keep unlimited. With bodily injury liability coverage, if you have more than the recommended minimum amount, your higher coverage amount is going to remain if you don't return it as well. So even though the forms are worded a little bit strangely saying that you must make your coverage selection, if you want that amount of coverage or more, you can disregard those.
Got it. So the safest thing is to ignore them because my coverage amounts could not be reduced if I've ignored those forms. Is that right?
Correct.
Got it. Okay. Well, let's get ourselves through to the Q&A, Derek, in the interest of time. I think it's pretty clear now that you and I and our office, we suggest keeping that unlimited personal injury protection coverage for a number of reasons that we've touched on. One of them especially being that the cost of that coverage is coming down and we're not giving up necessarily anything on our side. If you're choosing a lesser amount, certainly have that conversation with your health insurance provider, with your financial planner, and with your insurance agent to make sure that you are selecting the one that's most appropriate from you and that it makes sense from a financial standpoint. From the liability coverage standpoint, I think most of our clients have probably heard about an umbrella policy by now. That has certainly been the policy of 2020. An umbrella policy is simply more lawsuit coverage. It's a lawsuit coverage policy. It doesn't insure any physical assets. It simply puts more money on the table if you're being sued for a large amount to help get that lawsuit settled so that you're not having to liquidate your assets and pay some of that lawsuit out of pocket. So that brings us to the very end here. We're going to hang out for as much Q&A as there is to address. There is a question that's on the chat, but before we dive into that, Derek and I, and on behalf of our entire office, we want to thank you for joining us today. Thank you especially for your time, and most of all for working with us through this transitional period. It's been an overwhelming workload as we've studied the new law, we've gotten ready to implement the new law, and as we've been helping advise clients on how it's going to work and what we expect. Of course, we're going to see things change over the coming years. So work with us to make sure that we're in the right position. But thank you for being with us and for your trust and your business especially.